This is a Bitcoin monthly chart. It is important for many, many different reasons, but everyone, there it is. The green monthly Bitcoin candle close. The first one, if I zoom out, because I am zoomed in, the first one since March back here before actually falling below the 20-month moving average onwards to falling below the 50-month moving average. So not only is this a green candle right here on the monthly chart, but it's a green monthly close back above the 50-month moving average. That's a big deal for Bitcoin. Interestingly enough, though, there is data on the weekly chart and the daily chart that I would say is way more important to Bitcoin on the macro. And that's kind of odd, right? Because here's a monthly chart, the weekly and the daily. What is happening there, I would say way more important to Bitcoin on the macro, changing some things that we thought we might have known about Bitcoin cycles. That's what we're going to talk about in this video. So everybody, as we dive in, hit that subscribe and hit the like, and let's get into it. What's up, everyone? Welcome to Crypto Capital Venture. Thanks for cruising by. Let's jump in. This is the monthly. It's definitely a big deal. You're going to see it. You're going to see the headlines. You're going to see the YouTube videos. You're going to see crypto Twitter talking about it. A lot of tweets probably right now about this monthly candle closing green for Bitcoin. It's definitely a nice move considering what's transpired in this entire downtrend in the previous few months, but it's the weekly. And here's a snapshot of the weekly and what's happening there right now. And even the daily, I got some scribbles on there, but the daily chart and what's happening there. I want to really, this is important, everybody. Traditional markets. It's no surprise. It's no secret. We have to keep an eye on traditional markets. Tomorrow is a new week for them. We've been tracking the S&P 500 index as just kind of a really nice way to gauge and get a pulse of the markets. So what those markets do will really guide crypto, not just Bitcoin, but crypto as a whole. And we have to just be very vigilant in tracking that. And there's some very interesting data on that chart as well. That's what I want to dive into real quick before we dive into that crazy weekly and daily Bitcoin data. This is S&P 500. Check this out real quick. This is quick context. 20-week moving average cross below the 50-week moving average. Happened right here. It was like back in May. Previous to that, there was rejection at the 20-week moving average. Since that time, it's been around 119 days, and S&P 500 has made its way and closed a weekly candle. That's a big deal. Closed a weekly candle back above the 20-week moving average. But I want to just draw your attention all the way back here, and I have a little bit of a mark on the chart. Let me delete that. All the way back here was S&P 500 doing a similar thing. 20-week moving average crossing below the 50-week, kind of this rejection at the 20-week moving average and falling down and then getting brought back up to the 20-week moving average. So if we're comparing it to today, this is kind of where we are right now. Today, this is the 20-week moving average, or this weekend, this is the 20-week moving average close that S&P 500 just had, right? This is what it looked like back in April 2008, but this is what it looks like now in today's chart. You can see there was the rally kind of continued a little bit for like a month or so to the 50-week moving average, and then boom, you all know what happened next, going into 2009 and the housing market crash, right? So I'm mentioning that to paint perspective or to give perspective, meaning here we are, there's a nice rally happening, but we cannot get wrapped up in the emotional side of the story. We have to always zoom out on the charts and realize what's possible. Just because this move happened all the way back here and there's a huge crash, doesn't mean it's going to happen again, but it's something to visualize and it's something to mentally prepare for. This market is all about mental preparation, everybody. I don't do these videos to predict anything. I'm not here to tell you what's going to happen. I'm not here to tell you what to do. I'm not a financial advisor. This isn't financial advice, but this is data. This is a visualization tool that is incredibly powerful in determining what we do with our money today, in real time, in present time. So yeah, maybe we get this continued rally, maybe to the 50-week moving average. We wait for confirmations at that area, meaning resistance, or maybe even a breakout, bullish confirmation. But either way, there's a potential that this bear market that we're in extends, right? And then it could extend after this rally. So be mindful of that. But let's pivot back to the Bitcoin chart. This is the Bitcoin monthly. It's very nice to see, especially being we're in this Bitcoin bottom formation. So we want to see green candles in the formation. Another perspective to take note of is this. Yes, green candle after a lot of downside, but real quick, let's track back all the way, not to 2018 bear market low, 2015 bear market low. Check it out. Green candle then too. That was nice, right? It's nice to see that. But look what happened. Like over half of a year of insane volatility and actually retesting like this bear market low area months and months and months later, and just such volatility before finally breaking out and back out of the bear market, right? So keep that in mind as we're looking at the current Bitcoin monthly chart. It is a green candle, but none of us know what is going to happen next in terms of traditional markets, in terms of Bitcoin. But let's dig into the data that I think is even more powerful than really anything we've talked about so far. This is Bitcoin on the weekly chart. Now, you know, it's just some higher highs, higher lows. Bitcoin in a rally looks normal. But for me, this is powerful. And this is based off of just, you look back at my videos, I've been covering Bitcoin technical analysis for years, right? This move, the close above the 200-week moving average, to me is just a big deal. It's a very big deal. And this is why. If we're looking at this zoomed out weekly chart, I was back here doing videos all the way back here in the bear market bottom of 2018. And we were discussing these yellow lines, right? So back then, the 786 line of a key Fibonacci retracement, and that's this entire area. It's a 786 line down here around 4,000 to the 618 line around 7,300. We talked about Bitcoin consolidating in the bear market formation below that area, the 786, an accumulation zone. Bitcoin has not fallen below the 786 into that same accumulation zone. But what it has done is it's consolidated in a similar fashion between the 200-week moving average and the 786. This is what it did in the last bear market low, 786, which was above the 200-week moving average, and then here's the 200-week moving average, consolidated between the two. Notably, Bitcoin did the same thing in 2015, consolidating between the 200-week moving average and the 786 line. These key Fibonacci, macro Fibonaccis. It's like this macro consolidation, this pullback of Bitcoin. Bitcoin's overbought, markets need to cool off, and it's this pullback to this range for Bitcoin in these cycles. It's why we have such a really nice looking, almost artistic, just uptrend of Bitcoin. It's just parabolic move back to a key Fibonacci range, right? It's very nice to look at. And a lot of that has to do with the emotion behind these charts, what people are just consciously or subconsciously anticipating in these markets, and just this chart is forming. So here we are now, again, consolidating between the 200-week moving average, that red line, and the 786 line. But this is what Bitcoin has done already. And we're not that far into this low, this bear market formation. Bitcoin has closed a weekly candle above the 200-week moving average. Mind you, it's not like this huge overextension and separation from the 200-week moving average. It closed just above it, but that's a big deal because when we start looking back at these charts and we start looking at these previous cycles, Bitcoin didn't do that, right? Meaning to the upside, Bitcoin did not close above its upper trend line resistance, and in this case was a 786 in the last cycle. Support was a 200-week moving average, but it didn't close. It saw resistance at that upper trend line, in the 786 line, right? And then finally, a while went by and it broke out with just an explosive move in April of 2019. So this is incredibly important, I would say. And what I think it shows us is something we've already started to see a narrative around in the last year, and mainly because of this. This entire move is very uncommon to Bitcoin historically, right? So a lot of people have just been saying Bitcoin's acting different, right? The cycles are just changing in some way. Everybody has their own little way of kind of explaining it. But for me, this data point and this 200-week moving average close is kind of a really important data point in one other way, that Bitcoin is separating itself from previous cycles. And it could hint that Bitcoin is about to do something that we couldn't even expect. We couldn't even guess based on historical data. Because why I say that is a lot of Bitcoin charts, if you just look historically, it's like it's almost so consistent that it's easy to predict what's going to happen. Namely, these ranges at the bottom, right? The 786 to 200-week moving average. Last bear market low seemed a little bit easier to identify and to kind of predict or anticipate how long or where it would be, even more so than this one. And here's another data point that kind of adds to that. This 200-week moving average close already. What will be interesting, because there hasn't been a lot of separation, is to see what this week does, what traditional markets do. And I think traditional markets and this recession narrative and everything going on with interest rates and inflation, this is something Bitcoin hasn't experienced. And I think that's why also Bitcoin is acting so differently as well. And this is a big reason. We're in the middle of this traditional market rally. Bitcoin's in the middle of a bear market formation rally, right, to the upside, and it's breaking this 200-week moving average. But needless to say, that area is such a key area on these macro charts, the 200-week moving average, Bitcoin currently above it, right? So not only above the monthly, the 50-month moving average once again, but above now the 200-week moving average. And on the daily, this will define this macro cycle, the daily chart. And it's a very simple chart. I like it. I enjoy it. Here's what we have going on. It's a rising channel, very simple, higher highs, higher lows. Bitcoin kind of just trending almost in the middle of it, right? So very unknown right now. But what we do have amidst all this is a 20-day moving average crossing above the 50-day moving average. When we have this happen, we wait for pullbacks if we need support at these moving averages. The confluent area right now, it's really 21,200 or so at the 50-day moving average, 20-day moving average around 22,400. And this confluent area with this lower trend line, higher low, lower trend line of support. So Bitcoin could very much fall, and this is a good target to the downside if you want to anticipate in case it fails this rally to the upside. There's no breakout. It could fall like 8 to 10% to the downside to test support and continue to the upside. So keep that in mind. Now, breakout to the upside, here's where things get really interesting. Breakout to the upside is like $29,000 to $30,000 up in this range. This line right here is the 7. I don't even know why I'm trying to write with this, but it's a 786 of the weekly. I'm sorry. And look at that. I took all that time to write that, and it's not the 786. It's the 618 line up here, and it's around 28,500 or so. So 28,500 or so is a breakout target for Bitcoin, or is not the breakout target, but if Bitcoin breaks out to its target, it's an area that Bitcoin will be breaking above and breaking out of. The reason why that's so notable is, if we look at this chart, this would be Bitcoin escaping the Fibonacci and testing the 20-week moving average around 30,500. If Bitcoin makes this move, then we're going to be doing videos about Bitcoin bottom formation, Bitcoin exiting a bottom formation, because from a technical analysis perspective, put aside a sentiment, put aside what's going on with inflation and who knows what the news headlines will look like if we ever make it here, if Bitcoin makes it here, just solely on technical analysis, Bitcoin will be testing this entire area, the escape of the Bitcoin bear market. And what that looks like in previous bear markets is this. This is what it looks like. Bitcoin escaping, right? The breakout. Obviously, that last escape didn't last very long because, COVID happened. And you can see that on the charts. But then you go back all the way to the 2015. Look at Bitcoin reversing the entire downtrend, escaping this Fibonacci channel, right? Escaping it, seeing support, and just boom, to the upside. So if we find ourselves on these charts, strictly on these charts where Bitcoin's making a move and escaping these bear market claws, it will be such interesting data to track. Almost first of its kind if it happened so quick. But here we are, everybody. I digressed from that because we're sitting here not very far above the 200-week moving average. Bitcoin's still in the middle of the Fibonacci retracement. Even to get to that 618 line, Bitcoin still needs a nice solid move of 20 to 30% to the upside to escape it. So we're going to continue tracking that. But these data points on these Bitcoin charts are getting so fresh and so interesting and so new. There are things that are happening that they don't mirror the past. And a lot of times when we watch these charts and we talk about the consistency of Bitcoin, it's because a lot of these charts mirror exactly the past, meaning even this trading between the 200-week moving average and the 786 is something Bitcoin has done in previous cycles. But now breaking above so quickly, right, is very, very interesting to track. And that's what we're tracking right now. So at the end of the day, everybody, I'm not a financial advisor. I'm just out here like you watching these charts, trying to figure it out. And I hope you see the value in what I'm seeing here, which is these charts acting as a visualization tool, right? That's all it is, a visualization tool. So we can look at the best case, the worst case scenarios, and in the present day, make the best calculated decisions for our money. Because that's why we're here, to try and make wise decisions and prepare for our futures. So anticipating all scenarios is the way to do it. And these charts, I'm telling you, they offer such an amazing tool, visualization tool, in order to do it. Let's continue tracking it. It will be great to see traditional markets open green, the rally to continue, and we can really start tracking some crazy, exciting Bitcoin charts to the upside if Bitcoin does manage to get back up into that $30,000 area. Could you imagine? Still a ways to go, everybody. But the charts are exciting and they're very telling. Hit the subscribe, hit the like. I'll see you in the next video. God bless.